All right, welcome back, everyone. We're going to head into our first panel momentarily. But what we're going to do is we have, I will have Marcus Shroud, who's going to be moderating the panel. He's going to kick it off now, and then we have Marcus Shroud, Laura Washington. We have Preston James, and make sure we have let me see if I'm missing anybody, but yeah, thank you for being on our panel, and I will kick it off to you. So.
Great. Hey everyone, my name is Marcus Stroud. I am a co-founder and general partner at TH2 Partners. We're an early stage venture capital fund based here in Austin as well as San Francisco, focused on investments to change the way you live, work, and play. We launched the fund roughly a year and a half ago, or yeah, about a year and a half, year and like 6-7 months ago. Team of 5 right now, young, scrappy team, and we're really excited to be here today, and thank you for having us. And I guess I'll let the rest of the panel introduce themselves.
I guess I'll go next. Hi, everyone. I'm Lauren Washington. I am the co-founder of Funder, and we are a platform that automates and democratizes seed investing. And I'm also the co-founder of Black Women Talk Tech, and we are an organization that hosts the largest conference for Black women founders, as well as we now have Black Men Talk Tech, male founders, and we have chapters across the world to help people create billion-dollar businesses.
Hey, this is Preston James. I'm the CEO, co-founder of DivInc. DivInc is a startup ecosystem builder, and we have a startup accelerator exclusively for underrepresented founders. Our mission essentially is to create equity in the innovation economy, and essentially we're focused on helping underrepresented founders successfully build high growth businesses, and also working within the ecosystem to bring more diversity, equity, and inclusion in the form of not just founders, but also investors and mentors and talent into this innovation economy. And we see it as an economic imperative, not just for today, but for our future, that we all participate in this innovation economy.
So everybody, as Henry, have you had a chance to present yourself?
Henry's not on, but you have Laura and Preston. So you have the.
Okay, great. So it'll be just great. So I guess we'll get started with the questions. We'll hop right into it. So I guess Laura, Preston, the question I'd like to ask y'all to start off is, can you tell us more about how your venture improves funding for underrepresented founders, and anything you've learned so far that you'd like to share with the audience?
Sure. So I would say my two ventures do this in different ways. So Black Women Talk Tech, one of our core pillars is really about access to funding and research and promotion. So that comes out in a lot of different ways. So at our conference, we have a pitch competition. We have since given out over $150,000 over the years, specifically through that pitch competition. And after putting people on stage, they've gone on to raise millions after that. A lot of them got their first checks and were first seen there by an audience of investors. And then after they've been promoted there, they were able to then create a huge amount of capital for their companies. We've also had a number of people get checks just by meeting other people. We have an investor reception that we do every single year, and really just putting people in the same room and giving them access to a group where they normally wouldn't get access to has really changed the lives of people. So I would say there are over 30 people that we know of that have gotten funded literally just by coming to our conference or coming to our chapter events. And on the funder side, I actually started that out of my own pain point with my first company. I really struggled raising funds after I had won the 43 North competition. I got $250,000 from that. And to me, and to a lot of people, that should have been a signal that this is someone to invest in. And I struggled for years to raise funding to keep the company going. I heard the same exact stories when I started Black Women Talk Tech. It's the same thing over and over again, where you see these Black women who are creating incredible businesses. They're meeting all the goals, and they're still struggling to bring in very small checks. You know, the average Black woman brings in about $36,000 in investment versus $1.4 million for the average white man. And so after hearing a lot of these stories, they said there has to be a better way. I think our system is broken. If you have all these incredible people who are building these incredible businesses and they're still not able to get funding, there's obviously some kind of bias or barrier there or not that is stopping them from doing that. And so that was really the catalyst for me to create Funder. And that platform automates everything from the evaluation process. We pull everyone through a quantitative algorithm that looks at their startup on a number of different levels and really matches people based on what they're doing. And so you can look at quantitatively what your company is actually performing at. And then we automatically create a portfolio of companies for the investor to invest in. So it's not like they're picking companies themselves. They get these vetted companies that we've already run through our algorithm, and then they're able to invest in those. And then the process after is automated as well. So we automate the monthly reporting, we automate the conversations, and so that we are really putting everyone sort of on this level playing field. So one exciting way that I have brought the two together is I used Funder to run the applications for our pitch competition at Black Women Talk Tech conference this year. And we're really excited to announce that the winner of the pitch competition also got the highest score on Funder. So we essentially proved out that our algorithm actually works. So we're really excited to take that to that next level.
Congrats.
Thank you.
Preston, you've had such a distinguished career. You lead one of the most recognized groups here in Austin. I'd love for you to tell more about your background and what exactly do you think is doing to change the world.
Yeah, from my perspective, when I first started DeVink and the drive behind it was that, what I recognized as an angel investor was, to a point what Lauren was making was, the lack of access to funding. But what I also recognized, it wasn't just access to funding, it was also access to networks of, experience and exposure to the ecosystem in general, getting access to the resources in a very programmatic way. And then the network is extremely important in terms of being able to connect to those resources most effectively, most efficiently. And, complementary to, what Lauren was saying about, having the pitch competitions and creating exposure and connecting people, by putting them on the stage and allowing them to get connected with investors. I think there's also a process, right? I look at the journey of entrepreneurship, and you have the ideation, you have the validation, you're building your company in such a way that that you wanna, if you wanna get to that point where you are ready to scale your business, that is where you need the investment. And it is at that critical point in time where you need to already have a network or building a network of investors to get access to them. So DivInc was built on the premise of, you know, bringing access to those resources from an education standpoint in the form of an accelerated program, but, you know, focusing on, you know, what are some of the best practices, what are some of the know-how, right? Getting access to a network of mentors and talent and advisors that can help grow your business. And then also, you know, in the process of doing all that, building this network of access to investors, because the investor relationship is key. And I often guide people not necessarily to you know, there's going to be cold calling on investors, but what works best is when there's some sort of warm intro to an investor, because it is somewhat of a relationship that happens. Investors wanting to invest into a company, it's about, you know, investing in the person, in the team, and then also having the confidence that that team is the team that can execute and take that business to where it needs to scale. And that is, you know, there is a relationship that needs to be nurtured in that process. So DivInc in what we do as ecosystem builders, we're bringing those resources and bridging them to underrepresented founders. And as a result of that, we're essentially in the ecosystems that we play in, we're making the ecosystems bigger because they're actually more inclusive of underrepresented founders and mentors and investors and the talent, which is ultimately what we want to accomplish, where these ecosystems are authentically inclusive. And the better we do that, I think the more funds that become available, the more intentionality that people will have in terms of engaging and investing in underrepresented founders. So, you know, DivInc is coming from that perspective, and then also working to collaborate with all who are like-minded in trying to make this authentically inclusive. So, you know, continuing to work with, you know, TXV partners, as well as with Lauren and Black Women Talk Tech and Funder. We want everybody to come in, and we want this, we want equity in this startup community. So that's the focus of DivInc and trying to help underrepresented founders get access to that funding.
Great. I think somebody else joined us. Oh, there we go. We're good. Great. Thank you all for starting that off. My next question is, what are some of the challenges you have personally faced with raising funds? You talk about how important it is to build organic relationships with investors. Explain how that has been and how you were able to get into the room with investors early on, because, you know, from the seat of an investor, it's a pretty difficult room to get into. You know, you're getting a lot of inbound calls from people, you're getting a lot of inbound calls from entrepreneurs, and it's easy for investors to kind of, you know, pass on each person and only collaborate with people that are, you know, like-minded or, you know, have been introduced to some extremely warm connection. And so how has it been specifically in Austin? What are some of the challenges you have faced, you know, meeting investors, raising capital, and what is some of the advice that you have in building those relationships organically?
Lauren, yeah, go ahead, Lauren.
Yeah, I'll start, I guess. I don't know that I want to keep this specifically to Austin, because I think when I moved here,
we can do everything. Yeah.
Yeah, I think it still holds across most places.
True.
When I moved to Austin, I was at a different place than I was when I first started my startup. So I think the access I had was a little bit different. But I will say, when I first started my first company, Keep Up, I didn't know anything. I knew I wanted to be an entrepreneur. I knew I wanted to start a business. I was really lucky that I had 143 North, but I did not understand the industry at all. And I think that's true for a lot of underrepresented founders because they don't have people around them who have done this and have gone through it and can talk them through it. And so everything, like you were saying, from the warm introductions, you had to know somebody who knew someone in in this world. I didn't have friends who were doing this. My parents didn't have friends who were investors or who can introduce me into people like this. And so that was a real struggle. I really had to cold email and push my way into these different meetings. And like you said, a lot of times they, kind of throw it to the side if you're not coming in through a source that they trust. But that's really hard when your community doesn't necessarily have access to that kind of wealth on a regular basis. So that was one issue. I think even just down to understanding the lingo is hard, right? What are warm introductions, right? Like, I don't think that's something that people talk about outside of the tech industry. What is your seed round? What should that even look like? What does that even mean? Understanding what co-founders mean and how that brings you to the table and what they're looking for within your team. All of these different sort of code words that are used within the industry, you'll get dinged for sure if you don't understand them. And that if you're coming in and saying, I want to raise $1 million when you haven't even started, your MVP, they're going to look at you sideways. So that's really tough. And it's such a small industry that if you make a blunder, people know, right? People talk. So I definitely think that was really hard. I think the other thing is just coming in and dealing with certain biases, right? So I have had countless meetings where people ask me as a woman specific questions that I know they're not asking my male counterparts, right? I know we have to jump at a bar that's much higher than some of my other counterparts. And often you look into the room and the room just doesn't look like you, right? And so you're sort of trying to navigate and show these people that you're a leader and you can do this, but you're not really necessarily reflected in the larger media landscape of what a leader looks like. I don't look like Mark Zuckerberg. I don't look like Peter Thiel. I don't look like Bill Gates, right? And so who can I point to show that I can do this as well? And when you don't have someone on the other side of the table who is there sort of advocating and pushing for you, that can be really tough. So there's a lot of like systemic and social biases that sort of come into play when you're an underrepresented founder that are outside of some of the warm introductions as well. So there's a lot of hurdles you have to go through. I will say, to end that on a good note, I don't think that should stop you though. I think a lot of times we hear all of these things and they're true and you should know that they're true, but that doesn't mean that you don't move forward. Just because it's harder for you, it doesn't mean that you shouldn't pursue your dream. You just need to understand that your road is going to be different and it may be a little bit more difficult. You may have to go through pitch competitions, you may have to get grants, you may have to find other ways to fund yourself in those early stages so that you can prove yourself in a way that maybe others don't have to, but it doesn't mean that that's not a possibility for you.
Yeah, I would I would just kind of jump on that as well. Again, ReThink itself has had over 50 companies, come through the accelerator. I personally have, worked with probably thousands of companies in form of mentorship, angel investment, or what have you. And the struggle really that I've seen is at the early stage of building and scaling the business. I mean, Lauren alluded to many of the early challenges. I think Austin is, I'm not going to say Austin is necessarily unique, but I think the early stage funding is tough here. It's particularly tough in general. And so if in general it is tough, then that means it is going to be tougher for underrepresented founders to get access to early stage funding. So, Lauren also alluded to, you know, the friends and family round, and, you know, who in your family has, you know, money, disposable income that they can provide in the form of supporting a business. That's very difficult in the underserved community to be able to. So the early stage funding is the challenge that I see, and I think, you know, getting companies alongside of that, I think getting companies through the early stages where they are attractive enough to get that seed money or that early money, I think is just as important. Lauren mentioned, you know, getting access to the networks and mentors and understanding the lingo, understanding what investors are looking for, in particular accredited investors or institutional investors, and really understanding what is it that the business needs to show in order to be attractive for an investment. And then what are some of the various different types of investment, or where are the various different resources for funding? So the critical piece, I think, is this early stage, because the talent is undoubtedly there. There's no question about that. I think, you know, folks are still learning this journey of what, you know, of becoming this early stage founder, and many times it's a first-time founder, you know, going after this. And I've had countless entrepreneurs come to me and say, well, you know, I want to raise funding. I'm like, okay, when do you need the funding? Well, I need it right now. Okay, well, who do you know? I don't know anyone. So, you know, the challenging part of this, and I know Marcus and Lauren, is that going to an investor exactly when you need the funding, like if you need it last week, that typically the process is going to be 3 to sometimes 9 months or 12 months to get a yes on an investment, right? And sometimes it takes just as long to get a no. And you're going to get a whole lot more no's before you get a yes. And so this process is something that, you know, I think we need to get more educated on. And at the same time, we need to bring in more resources for funding at the earlier stages, so that, you know, we have much better chances of getting to a point where we can scale and grow, become more attractive to the next level of funding, if need be.
Great. Yeah, and I'll jump in and I'll add 2 cents as well. I think something that I've learned in my own journey as a venture capitalist, building a fund that resonates well with folks in marginalized spaces as founders, is you have to be incredibly scrappy when you're raising capital for the first time. And when I say incredibly scrappy, I mean you have to think in very esoteric ways that a lot of your white peers and just other ethnicity peers wouldn't necessarily think of. And so I think something that, you know, everyone should know is that everybody doesn't drink from the same well. You don't have to go to the same resources for capital. You know, if there are 6 funds in town, you don't have to go to those 6 funds to get capital. If you get a no from all 6 of those funds, that doesn't mean that your company isn't good. It doesn't mean your business is good. That doesn't mean that your chances for capital are extremely low. You just have to keep looking elsewhere. And I think, you know, it's been so great to see the rise of so many great Black-led, minority-led, women-led funds in the country as of the last couple of years. But I think while that is incredibly awesome for founders of color to have visible, notable resources of places you can go for capital, it also hurts because now a lot of founders, you know, the minute they start raising capital, some of the first questions that people of color get asked is, have you talked to Harlem Capital? Have you talked to Backstage Capital? And you don't want that to be a thing, because if you're really going to democratize capital, you know, founders of color should be able to raise capital from any fund. You know, it shouldn't have to be, you have to go raise that fund because that fund actually has 3 or 4 Black GPs at it. And that's something that, you know, Brandon and I wanted to change when we started TXV. We didn't want to be a fund that, you know, only talk to this group or this group or this group. We wanted to be able to bring everybody together in the room, obviously with a focus on helping democratize this ecosystem. And so we have a couple really good questions here that I will address one by one. One of the questions was, sorry, here it is. Do you believe with the increase of number of entrepreneurs from marginalized and underserved communities, do you believe the next step in building the startup ecosystem is to build investment circles by people of color to strengthen the startup ecosystem for entrepreneurs of color? That's a great question. It goes back to what I was just saying. So do you believe basically we need to start creating more investors in order to help support this growing ecosystem of underfounded entrepreneurs?
Yeah, absolutely. 100%.
Yeah.
Go for it, Preston, 'cause I feel like this is more.
Go ahead, Lauren.
No, I was gonna say I 100% agree. And this is something that I've had a lot of conversations about. I think having, like I was saying, having people on the other side of the table who look like you and who are invested in that community is incredible. I think there is still an education piece for a lot of people to get into angel investing and to get into VCs, because like I said, it's just really not something talked about within different communities. So I will say there's definitely wealth, right? There's wealth in our community. It may not be as large as maybe the white community, but there's definitely wealth there. But they're spending they're investing in different ways, right? They're mostly investing in things that they understand, which is real estate. They're not investing in startups. And I think a lot of that is partially education, but the other piece is access. And it's crazy, but there's an access issue on the investor side too. So you would think because I have this money, I'm able to get into various funds, or I'm able to get into different rounds, seed rounds or other rounds. But you mentioned capital, but they put out a report as well that showed that there is still a disparity as well on the investor side, that they're not getting hired at VC firms, that they're not getting access to these huge deals. And so I think there's still a lot of work to be done on that side as well, in terms of making sure that they understand the risk assessment, but also the reward of startup investing, and that they also have access to the deals where they can profit from.
Yeah, I think it's imperative. I think it's imperative that we get more people of color and women in these investment decision-making roles, whether they be at banks, whether they be grants and foundations, whether they be at venture capital, angel investor groups. It's imperative that we get more a population of diverse folks at these decision-making roles, seats at the table to help make decisions about, who, we're investing in. And I say that it's important because I've experienced, for example, just being a person at the table in pitch competitions or judging for certain competitions where there is money to be handed out. And as a person who has influence at that table, to use the voice to say why this particular company is something that we should invest in, I'm able to offer a different perspective. And I think collectively, as you have these different diverse perspectives, and whether or not something is an innovative solution and has scale and has growth and has opportunity and can bring in a return of investment, that's essential to how we move forward. And where we are today, I mean, Marcus made the point that we've had a growing number of underrepresented community moving into these roles or creating their own funds. Essentially, I would love to see more people of color and women into these existing venture capital and angel networks already. We need more folks there. At the same time, we also need new avenues of capital to make available. I like the word that, Marcus talked about, democratizing the investor community, democratizing entrepreneurship. It's essential and it's imperative that we do that. And along that, how do we prepare? We need to be looking at how do we create a pipeline of, future investors, right? So that we're getting more, more diversity at these venture capital firms. So this pipeline development needs to start and now, right? Getting people of color and women into these venture fellow programs, getting them into programs that build that pipeline. It's critical, it's essential that we do that. And I think it's just, great for our economy. I think it's great for the wealth building and job creation that we do that, because innovation can come from anywhere and everywhere. So I'm a major proponent, and I want to see us continue to do that on all levels.
Yeah, I could not agree more, Preston. I think I want to highlight some of the efforts of some people that are doing some incredible things in this space that, they aren't necessarily getting the publicity that, others are getting for building something. But, I think it's so cool to see, like, I don't know if any of you saw the news, but SoftBank just launched a program yesterday called the Emerge program, alongside WeWork. And, we were fortunate to be able to, build a relationship and help SoftBank with some of that, building that out. And I think, it's not just SoftBank. There are so many other funds that are doing this. But I think what's happening across the global ecosystem is people are starting to realize this is an actual problem. And if we're only going to change this problem, it starts with capital. It can't just be these make you feel good words, hey, here's a couple resources. It has to start with capital. It has to start with access to capital. It has to start with tangible introductions to capital. And so it's cool to see that, yes, it is still extremely difficult for people of color to raise capital on the fund side, on the founder side, but it is awesome to see that in a time like this, there is such a eye towards this that, folks are starting to be held accountable in building these things. I think something that, we personally do, we make sure that we have a program of about 5 interns each summer. And we make sure that 3 of the 5 interns are women or people of color, because the goal for us over time is to be able to help educate, back, fund, investors of color. That way they go off and start their own fund. That's the goal.
That's right.
What you see in Austin, Texas is, and I'm using Austin as an example, but you can see this in Silicon Valley with so many different funds, is that this fund started in Austin 20, 30 years ago. And the fund had so much success that it created a million different funds from that one single fund. And you see the same thing in Silicon Valley. You see the same thing in New York City. And you want to have that happen at funds of color. That way other funders of color can start and create their own fund. That's real innovation. When you have 15, 20 different funds, not just 2, 3, 4 funds that you have to go to raise capital. And I want to go back to what I was saying earlier about just esoteric ways of raising capital. I think, when we first started our fund, we were fortunate that we were backed by a couple famous athletes and celebrities, just due to some of the relationships that I had growing up. I was fortunate that my senior year of high school, a famous baseball player took me and my family in, and from there he supported me throughout my life, and then he introduced me to other people, and we had a lot of privilege when it came for us when we started raising our first things of capital for our firm. But I had other friends who were building companies who didn't have that type of privilege, and so I would sit in rooms and we would come up with ways for them. And the thing is, I recognize the privilege that I had, and Brandon and I recognize the privilege that I had. That's why we have such a heart for this, is because even though we are Black men of color, that we have just as much privilege as some of the white funders, just given the networks, the fact that we went to Princeton, the fact that we have access to these athletes, the fact that we had people like SoftBank who took interest in us early. We recognize that privilege, and so we want to be able to help any way we can. And so we wanted to put on our hats and say, how can we think in a scrappy way that some of these founders are? And one of the things that we learned to be extremely helpful to a lot of the founders that we were talking to was, especially the founders of color, is that there are certain networks they weren't trying to tap into that actually proved to be fruitful. So I'll give you an example of two founders. Most people of color like ourselves don't come from family wealth. That's just a fact. I mean, it's just a fact. Unfortunately, it is. And that's another problem that we're addressing in the world right now as we speak. But, you know, a lot of founders are fortunate, have gone to great college institutions or come from large fraternities or large sororities. And so we had said, how about you reach out to your college network and see, you know, and sell some of the alumni in your college on your story, on your vision, on your help, and just see what happens. And I kid you not, this one entrepreneur in particular reached out to their college network, and they didn't go to some Ivy League school. They didn't go to some massive institution like University of Texas. They went to just a school that, you know, was looking to build themselves up by seeing success from their alumni. They raised roughly $300,000 from their college, a group of alumni, in a span of 2 months. And that was their friends and family round. And so that's a one-off example of an entrepreneur using an esoteric way of finding capital. But I feel like there has to be so many more ways like that for folks to raise capital, just because it's hard. It's harder for us. And like you said, Laura, it's extremely hard. But you have to recognize that when you build a company that you're taking the hard road, you're going to make the hard decisions, and you're going to figure it out. You know, there's just so much joy, though, when you do find that. So I guess the next question that we have is, how would you tell business owners to weigh the decision to pursue capital versus just operating the business and getting traction? So when do you think is a good time for you to pursue capital, you know, when building your company? Some of the metrics that you may have used when building your company, when getting access to capital.
That's a really good question, and something that I think everyone asks. I think it depends on your industry, where you're at, as well as the stage that you're at. So like I mentioned before, we keep talking about this friends and family round. There's a number of different stages that you go through as you're raising. So friends and family is the very beginning stage. That's where you find people who believe in you specifically. Like, you may not have a lot of traction, but they really believe in you. They want to see you succeed. And so you're getting that literally from your friends and family. We mentioned a number of times that is difficult for communities of color, but not necessarily impossible. I still think you should go out and make those asks. You never know where that money might come from. And some of that is yours as well. So putting your own skin in the game and putting some money in to get your project off the ground. And then you would move into your angel round, which are people who have money. They're accredited investors. Those are people who also want to see you succeed, but usually have a love for the industry you're in, or a love for the area, right? They want Austin entrepreneurs to succeed. So those are people who have a significant amount of money, and they're putting money in at very, very early stages. You would then move to your seed round, where you're really showing traction at that point. You need to show that you have at least your MVP done, your product is in market. You probably have some users, a little bit of revenue. You're kind of proving that model out. And then there's Series A, where you really know that your product works, right? That's $1 million and above. And then you go into the B, C. I mean, I don't even know where it ends anymore, but you know, there's different stages for that. So I will say I have shifted my thinking, right? I think a lot of times entrepreneurs come in and their goal is to raise money. Their goal is to get to $1 million. That should not be your goal as a business. You should be creating a sustainable business, right? So focusing on traction will always work in your favor, because you either are always bringing in money for yourself, right? You've created a sustainable, profitable business. by focusing on that. Or when you do go out to raise money, you're in a much more powerful position anyway, right? And so it's really hard to go and raise money and you don't have traction, you don't have revenue, you don't have these things. But when you do have them, the conversations at the table are very, very different. And so I have always said, yes, I understand that raising money can be helpful when you don't necessarily have the funds to build out your company. You're putting a lot of money in there, but the money should be used as a catalyst and fuel for something that you know already works for you, right? It shouldn't be, the goal should not be just to raise money so that you can build a company and figure it out. The goal should be taking that money and just really putting that business on fire, right? And taking it to that next level because you already have figured it out. And yes, that's very difficult to do, but I think we should not be looking at raising money as like the goal, but looking at creating sustainable businesses as the goal. And we need to really shift our thinking for that, I think specifically within the Black community.
Yeah, back on comments, I've been participating in quite a few discussions around fundraising, and that's always the biggest draw, right? Pitch competitions and fundraising. And I kind of go back to what I was saying earlier about this journey of entrepreneurship, and that it is a process. And part of that process is really getting to building a business that can grow and scale. And you have to do that in a very fundamental way. And when I say that, I mean, it's really understanding, your market, who your customers are, and then sort of proving that, your business is not only sustainable, but can actually scale as well. And, I emphasize the word scale in this particular instance because data shows that, for example, Black-owned businesses have not traditionally have employees. So 96% of Black-owned businesses don't have employees, right? And then when you look at some, even within the Black community, businesses that have employees, the difference in the revenue generated by companies that don't have employees and companies that do have employees is very significant. It's a difference between $58,000 and almost $1 million. So in essence, what it sort of points to is that, if you can build a scalable growth business where you can hire maybe 3 or 5 or 10 people, right? It's, there's scalability there. There's more revenue that can be generated as a result. And so the premise of coming in and focusing on building that business, kind of reiterating what Lauren's saying, is so important. And there is a process to really get to that point where you're saying, okay, it's growing, and it's, how fast do you want it to grow? How fast do you want it to scale? Then the conversation about capital and how you can go and grow that. From an investor perspective, it is attractive when a company comes to them and can demonstrate of that growth. And also for an investor for that growth in a very large market, right? Is the market that you're in, does it have opportunity to grow significantly, and so significantly that that investor is going to get some sort of return on that investment that they made, right? And the ways that they can do that, there are a number of ways, but from the equity standpoint, that typically means there's some sort of exit strategy, right? Where the company is getting acquired or something of that sort. So, you know, I can't emphasize, you know, more the point that, you know, Lauren was making and now making as well, is to get that focus on, you know, really proving out that you can grow your customers, you can grow your revenue. And the conversation with investors kind of changes a bit because now you're coming in with the confidence of knowing that you have the potential to grow something pretty significant. Right. And it's either them getting on board or not, right? As opposed to, you know, please give me money so I can go and build this. It's really, you know, if you flip it the other way, it's like, you should want to get on board. If you don't, that's your bad. I'm going to go elsewhere and get it. Sooner or later, I'm going to get it, right? And that's really what we want to have happen, you know, working, you know, in this ecosystem is helping these entrepreneurs come in with that level of confidence because they know their business inside and out. They know their customers, they know their market, they know who their partners are, they know how to get to them, they know how to acquire their customers and grow those customers. And that's really where we should put the emphasis. And but reality capital is critical, so we need to solve for both of those as we move forward. The last point I want to make is there has been a shift over the several years with the investment. When I say that, and I said earlier that early stage investment had become relatively hard to get because the angel investor community and the venture capital community sort of moved up the investment chain, if you will. You know, Lauren talked about seed stage and Series A and Series B. The amount of dollars sort of allocated to seed stage has somewhat gone down over the last several years, and more money has become available at Series A and sort of Series B, and or the seed stage definition, the amount is much higher than it used to be. Yep. And so with those changes, you know, that's why I was saying the early stage seed funding has been down out threshold have sort of crept up, and so you know, getting that seed stage is a little bit harder. But back to the point, the better you can demonstrate you have a scalable growth business, the better the conversation with investors.
Great. We have time for one more question. So I guess I will ask, what final words do you have? What final words of advice? What resources do you recommend? And who are some of the people in the space that someone who's looking to build a company may be able to look to for some advice, some guidance, and for some inspiration? I'm sorry, that was a pretty big question.
All right, go ahead. You good.
Yeah, so I am a huge proponent of finding your peers in the space. So especially for underrepresented founders, like I was mentioning before, there's not a lot of people who have gone to where we're trying to go, right? There's so few entrepreneurs who've created their billion-dollar unicorn companies, right? So everyone is sort of all figuring this out together. So I would find your communities and share your stories and support each other. That's huge. I think that was the reason we started Black Women Talk Tech 4 or 5 years ago, because we felt really isolated within what we were doing and hitting all of these blocks, but didn't realize that it was something that other people were experiencing. So it makes you feel like you're the one, you're like your business is terrible, or you're a bad entrepreneur. But when you find other people who are going through the same things, you can support each other, inspire each other. It is so important as an entrepreneur to have a really, really strong network. because it's the rough road, and you need people to kind of pull you through, and you need people who have the same experiences as you do as well to be there with you as you pull through this journey. And then I think in terms of looking at other resources, there's a ton of different groups. There's Black Tech Week, there's Founders of Color, there's Black and Brown Founders, there's Afrotech. There's a number of different communities that are starting to grow and build right now to sort of create these ecosystems to help entrepreneurs. So I think even from a couple of years ago when we started, I didn't feel like there was a lot of places that I could go and reach out to, but Marcus, like you were mentioning, now that there's a lot of funds, I think there's also just a lot of different support networks that you can find, because the word is out. People know that this is happening now. There's numbers behind it. There are people who are speaking their truth behind it. And so I think there's a lot of places for you to find resources that you need to work through and get the funding that you need.
Yeah, complimentary to that. You know, the networks are essential, and I don't know, and I don't try to build a business by themselves exclusively. It doesn't happen. It's virtually impossible to build a growth business by yourself. So that said, you need to be a support network, and you know, like, you know, Black Women Talk Tech here in Austin. Autumn is here. There are organizations here who we're in a network of support. There are mentors. We have to have access to mentors. Not the folks who, you know, I work at Facebook and my mentors at Facebook. No, I mean people who are in the space of helping startup founders and who have expertise and knowledge and experience, serial entrepreneurs. There are workshops that you need to tend to, but I think the starting point is finding that network that you feel like you can be part of and thrive, right? You can feel comfortable and you can feel vulnerable to express, you know, the challenges that you have within your journey, your everyday, whether you're a person of color or what have you. Find that network. I think there's one of them here. Be Wise is Black Women in Science and Engineering is here. Black Women Talk Tech is here. And then many others, Latinas in Tech. The list goes on. I mean, we don't have a whole bunch, but we have some, and it's growing. Those networks I alluded to the fact before, democratizing the ecosystem. We can't, you know, build silos and remain in silos, right? These networks are meant to bridge us to the broader access to resources and opportunities that already exist that we do not know about or we don't have access to. That's what those networks should be doing, that we become a part of. Right? And that's really, really key, because a lot of the funding and the capital are going to be from people that don't look like you. And if you're going to be a successful founder, you're going to have to be able to do that very, very well. You're going to have to be able to engage outside of Black and Brown, because at the end of the day, the majority of that capital right now rests in the hands of, you know, white males. And they're not evil out there. They just don't know what they don't know. As smart as they think they are, they just don't know what they don't know, right? And on the other side of that is we don't know what we don't know either. And so let's just bring a whole bunch of folks that don't know about what they don't know together, and together we can do, you know, a whole heck of a lot more than what's been going on today. So I invite you, I know Lauren invites you to become part of our communities at ReThink and Black Women Talk Tech. we invite you to come and be part of that. Get started. Ask all the questions that you want to rock and roll. For those of you who are looking at funding options, again, it's still the same place. You know, we can help you access opportunities and investors, but we want to also help you prepare so that when you get in front of those investors, you're ready. Because oftentimes, if you come too early, you know, it's going to be hard for you to get back, right? And so we want to help you prepare and get you to where you need to go most successfully. So that's the word that I will leave you with. Just come be part of this. Last one. If you are a student or if you're at the university, go search your school of business. Go search, you know, entrepreneurship. There's some activity on every campus here in Texas. UT probably has the most significant resources. HT is building that they have an innovation center on their campus. St. Edward's has a pretty robust entrepreneurship program. So students, there is access for you. Ask for it, you need to search it down. And if nothing exists, start something. Start something.
Gotcha. Well, Preston, Lauren, thank you so much for your time. As always, Preston, Lauren, this is great. Thank you all for joining us this morning. Unfortunately, we have to close. We're a little over time now. I put my email in the chat box, so feel free to email me for any resources or questions you have on funding that I may be able to answer. And I'm sure you can get in contact with Preston and Lauren as well. Thank you all. Have a great weekend and stay safe.
Thank you very much, Marcus, for moderating that panel. Thank you, Lauren, and thank you, Preston, for your wisdom. All of you, that was fantastic. What we're going to do is we're going to take a quick we're going to jump right into a quick networking session.